If you were looking at crypto through the lens of what's happening right now in terms of short-term price action, maybe a latest headline or a recent rally, it might seem like that you're too late and that you've missed the boat. All I ask you to do is just zoom out, take a broader view. When you look at the space in the context of where we've been and where we're going, it becomes so clear that this hasn't even truly started yet. So no, you're not too late to crypto. But here's the catch. If you don't understand the foundational concepts that I'm about to walk through, none of that is going to matter. You could be early, but still get left behind. Quick disclaimer, nothing I say here is financial advice. This is for education and entertainment only. I want to give you perspective, not predictions. All right, so let's begin with the system that we're living in right now. Fiat currencies like the US dollar are not holding value over time. That's not a conspiracy theory. That is literally just how the system works. Governments print money to stimulate spending, pay down their own debt, fund deficits, and then keep the economy moving. The entire framework is debt-based. And in a debt-based economy, the money supply has to keep growing or the machine breaks. That's why if you track the money supply, like M2 for example, it only moves in one direction, and that is up. Don't believe me? Look up why is deflation bad for the economy and why is stagflation bad for the economy, and you will see that this system has to work based off inflation. Now, contrast that with Bitcoin. Bitcoin doesn't inflate its supply endlessly. It is hard capped at 21 million coins, and that is it. That's the ceiling. It's written into the code. No one can vote to change it. No central bank can intervene. It's fixed, predictable, and governed by math, not politics. But scarcity alone doesn't make something valuable, right? You could have a rare item that no one wants, and it's still worthless. You find a rare rock in your backyard that looks cool. You can't sell that. So what gives Bitcoin value? The answer isn't just that numbers go up over time. It's way deeper than that. Bitcoin is valuable because it solves a fundamental problem of the digital age. How do you transfer wealth over the internet without needing a third party to approve it? Without having a third party scalp your fees on top of it? With Bitcoin, anyone on Earth and with an internet connection can send value directly to anyone else, peer to peer. It's been tested for over a decade, attacked countless times, and it's still standing. That level of resilience is unprecedented in these times. Critics argue that Bitcoin has no intrinsic value. Okay, but neither does the dollar. The US dollar is valuable only because people think that it's valuable. Only because people have trust in the US government and because you have to use it to pay taxes. It's like gold. Why is gold valuable? Anybody could have chosen any other material or resource on the planet at the time that people just decided that gold was valuable for whatever reason. It is rare. There are other substances that are more rare. Why didn't we choose one of those substances? It just so happens that a certain number of people came together at one time, associated value with gold, and then it took off from there. And then it became almost like a self-fulfilling prophecy. That's kind of the track that Bitcoin is on right now. Anyways, imagine a world, hypothetically, where a government allows taxes to be paid in something else other than the US dollar. Maybe Bitcoin. What then? At that point, Bitcoin becomes functionally equivalent to fiat, but with just one major difference. It's finite. You cannot infinitely inflate the supply. And that's where things start to get interesting. I like to think of Bitcoin as a network, a utility layer for more financial activity, a foundational layer of code that other coders can build upon and scale, almost infinitely. Kind of like fiber optic cables or railroads in the early days of America. You don't need to understand every technical detail of blockchain to grasp the importance of infrastructure and the importance of foundation. It moves value the way that the internet moves information. And in places where governments are unstable or inflation is out of control, something like Argentina or Venezuela or Lebanon, countries that have had hyperinflation and their economy has been destroyed, Bitcoin is more than just an asset for them. For us in America, it's kind of like a toy. It's a plaything. But for those countries that have imploded, it's kind of like survival. Those are the things that have value for them, not their local currency. So let's circle back to the money supply. This kind of ties in perfectly. Fiat currencies inflate. Bitcoin does the opposite. Every 4 years, its inflation rate is cut in half, called the halving, and it reduces the number of new coins that are entering circulation. Now, there's only 21 million coins that can ever be released, and right now the majority of the supply is released, so that mining rate that is reducing every 4 years is only on the small number of coins that have yet to be released to the public. So even though the mining rate is still out there, it's not like more than 21 million coins are ever going to be issued. It's capped at 21 million. A little bit less than 21 million have been released so far, and we're just trying to bridge that last percentage gap with the reducing supply. And all of that is baked into the protocol of Bitcoin. And that's why it's considered disinflationary. It doesn't just slow down inflation, it guarantees the complete lack of inflation once the full supply is released to the public. You cannot print any more Bitcoin. So what does that mean in real terms? It means that supply is shrinking while demand keeps growing. The reason why supply is shrinking is because the more people that buy it and don't want to sell it, that takes the supply off of the open market. You've had people that lose Bitcoin because it's in a wallet or a computer that they lose access to, and that's gone. So there are realistically less than 21 million Bitcoin that are circulating, hence the shrinking supply, and also demand is increasing over time. So when you lock supply up and then you increase the demand, price tends to rise. It's basic supply and demand economics. You've probably heard about Bitcoin Pizza Day, when someone paid $10,000 for 2 pizzas back in like 2010. At that time, it was a couple tens of dollars, $20, $30, $40 for the pizza order. And now that thing is worth over $1 billion. That's 15 years ago. Imagine what's going to happen in another 15 years. And now we are at the critical point of the past 2 or 3 years where the most amount of adoption has come into play. We've got governments adopting it. We've got state pensions adopting it. We have hedge funds adopting it. It's all going in this direction that we have never seen before in the past 2 or 3 years. We're talking about 15 years of $40 to $1 billion. What's in store next? Now, that story sounds very absurd even to me, somebody who's very invested into crypto and Bitcoin, but it illustrates something pretty powerful, how value accrues over time when scarcity meets adoption. So let's bring this all home. Think about housing. Over the past few years, the number of Bitcoin required to buy an average US home has decreased dramatically. There's no guarantee that this will continue, but if it does, not owning Bitcoin might actually be making you poorer in real terms. The dollar that you are saving is worth less, and Bitcoin becomes harder to get. So that's what inflation does. It slowly eats away your purchasing power. Over the past 20 years, look up how much your purchasing power has decreased, and I promise you, you will be shocked. Bitcoin, though, for many represents a hedge against that erosion. So let's address the elephant in the room. Why is the government allowing this to succeed? You know, people are going to say the government would never allow this to succeed. They would never allow something to replace the US dollar. I'm of the opinion that I don't think it's going to replace the US dollar. I just think it's going to become a tool that we use kind of like gold. We have associated value to gold that's now societally valuable, and Bitcoin is quickly on its way to kind of the second placeholder right next to gold. But it also doesn't need permission. So it honestly doesn't really matter what the government says. If enough people outside of the government want to transact in Bitcoin instead of the US dollar, they can do that. So it's not traditional, and it operates outside of traditional systems. You can try to regulate it, you can try to tax it, restrict access, but you cannot stop the network itself. And we are already seeing a bunch of those things with the war between the SEC and crypto firms and government trying to see how should they tax it as long-term capital gains, should they have gains, should they have a new tax bracket for crypto. All this stuff is being worked out. All that regardless, though, you cannot stop the Bitcoin network. It is not going to go away. The nodes, the miners, the wallets, they all exist across borders and jurisdictions and countries and politics and whatever it is. So now let's shift gears towards adoption. As of now, fewer than 600 million people globally own any crypto whatsoever. That's less than 15% of the population. So most people still have literally no clue what is going on here. Talk to your parents, talk to some of your friends. I guarantee you the people that are watching this video that are at least interested in it, and even if you don't own any yet, you are already leaps and bounds ahead of the general adoption. And this adoption tends to follow a curve, the S curve. First come the innovators, then the early adopters, then the majority. Right now, we are entering the early adopters phase. Entering that phase. You do not understand how early we are yet. I'm telling you, you do not understand how early we are yet. I'm not talking about this cycle in the next 1 year when crypto is supposed to have its blow off top. I'm talking about in the long run. This is like the dot-com bubble. This is code that is going to be implemented into existing code that we already have just to make it better. Crypto is essentially better code. But this mass adoption is not going to come through retail investors just opening up a Coinbase account. It might come silently through back-end integrations at banks, payment apps, and tech platforms. All of these things are actually already happening right now that you might be unaware of. Look up ISO 20022. That's implementing blockchain into financial payment systems and cross-border payments. It's already revamping our financial transaction systems, and most people are completely unaware of it. All of this stuff in culmination is going to spread pretty quickly, and you might miss the boat, especially once institutions join in, because once they join in, you know that there is money in the game, and that's exactly what we are seeing right now. The best part of all of this, though, is you do not need to understand blockchain. You won't understand blockchain unless you're working in the space or unless you're just dedicated to this, but it's fine because you don't need to. The experience is just going to be seamless, just like going to Google, typing www.whateversite.com. That is going to utilize blockchain. Me sending somebody $5 for a drink at the bar on Venmo, that is going to use blockchain. It's going to be integrated into our code because it is code. That's why it's so beautiful. All of the heavy lifting is going to be on the back end. Adoption is going to happen whether you know it or not, and whether you're ready or not. So back to today's market. Yes, the price of Bitcoin is very high. It's at an all-time high, actually. So is the stock market. Pretty much everything is at an all-time high right now. The housing market, the stock market, crypto, you name it. And this brings me to where we are in the 4-year crypto cycle, because if you're not aware, crypto operates in a 4-year cycle of bull run followed by a bear run. The bull run lasts about a year. The bear run typically lasts about 3 years. Look that up in a further video, or I can make another video in the future kind of covering how it works. Right now, though, what you need to know is we are in the later stages of the 4-year cycle. We are in the last part of the bull run that could probably go on for another 6 months. Some people say maybe a year. The general window is end of this year to sometime beginning of next year. There's different opinions on all of that, though, so you should do your own research and come to your own conclusion. However, we are in the last stages of this cycle, meaning that we are not just going to go continuously up from here. There are going to be corrections, and then there are going to be future bull runs. So this does not mean that you need to have the perfect strategy. This just means that you need to adopt some strategy. Maybe it could just be dollar cost averaging. Pick a certain small dollar amount every week, every month, every couple days, and just slowly put it in over time. You're going to be investing at all-time highs right now. In a couple months, you might be investing at the next cycle lows. As long as you keep your deposits consistent, you should average out over time. I also urge you to stay away from the whole super cycle narrative, meaning, oh, now the institutional investors are getting involved. The 4-year cycle is ruined because it was only retail investors before, and we're never going to have the 4-year cycle. Mega boom, mega crash. It's not going to decrease by 75% again. Do not listen to those people. It could happen, but betting on that is financial suicide. If you're betting that this is going to be the cycle that just goes up and never comes down, people were betting that last cycle. People were betting that the cycle before. And realistically, Bitcoin is a large asset, but it is not large enough to be the end all be all and take over the world. There's going to be volatility. There's going to be more ups and downs. I just urge you to stay away from that narrative, but that's just my 2 cents. I firmly believe, and it has worked for me, that DCAing over time is just the best way. That's in traditional markets or decentralized finance. And the beauty about right now is that you don't have to just go through Coinbase or something like that. You have ETFs, you got retirement account options, you have institutional grade custody and regulated platforms because the infrastructure is here. It's already in your Schwab account. It's already in your Fidelity account. You can access these things. You just have to take the first step. You're not too late. In fact, you may be on the verge of understanding something that could define the next financial era. You always hear people talk about the dot-com bubble in the 2000s, and you look at stock prices back then, they crashed 90%, and then the rest of the whole cycle of the stock market that we're in right now with the Magnificent Seven leading the way, you are on the verge of that because there are certain tech companies and certain coding companies that are associated with cryptocurrencies that are weaving their way into the economy and into traditional finance, just like Google was, just like Apple was, just like Amazon was, just like Facebook was. All of those names that you know of, those are starting to happen in crypto. And not to mention those companies that I just listed, those are actually partnering with these companies in crypto. They're picking the best projects that they think are going to succeed and define the future for e-commerce and for coding and for financial transactions. So the easiest way to go about this entire game is just go to those companies' websites. You can do Google search. Who is Google partnering with in the crypto space? Who is Apple partnering with in the crypto space? What crypto company did Facebook just acquire? Those are real topics that you can look up, and you will get news articles that tell you which coins those companies are picking. Let them do the hard work for you. I'm not saying just copy their trades, but let that be the start for your research and then go from there. So anyways, if I could sum all of this up, we're probably going to see lower prices in all coins right now because of where we are in the 4-year cycle. If we're wrong and we have a super cycle, great. I have bags. A lot of other people have bags. We can capitalize on that, but it's not smart to be 100% into something that you don't know if it's going to correct. So my advice would be to just start DCAing, pay attention to the space, keep it on your radar, and if we start to see lower prices, that is when you should start to up your investment because that is how you take advantage of lower prices the most. So if you made it this far, thank you guys for watching. This was originally a political commentary channel, but I've decided to kind of change course. I'm a finance guy. I'm actually a trader in real life for my job. So this is much more in line with what I actually like and talk and read about every day. But yeah, I appreciate the support on all my past videos. I hope this brings in a new audience. And let me know your thoughts in the comments. What do you guys think about cryptocurrency, how it's working its way into financial systems right now? Are you invested? Are you not invested? Are you looking to be invested? Give me the whole spiel. The bottom line is that the system that we've known is changing. Maybe it already has, but the question isn't whether crypto is the future. The question is whether you're going to understand that future before it arrives. So I'm Jake. It's been real. See you guys in the next one. Peace.